In this video, example 7.2 from Group Statements Chapter 7 is expanded on a little bit further. In this example, at acquisition date, the land of the subsidiary was undervalued by 20,000 Rand, and the subsidiary, applying the cost model, did not value adjust in the separate financial statements before acquisition date. The value adjustment, therefore, had to be processed through a consolidation journal entry at acquisition date. Would it have made a difference if the consolidation was done at 31 December 2010 and the subsidiary sold this land that was revalued at date of acquisition for 110,000 Rand cash during 2010? It will make a difference. First of all, the journal entry that the subsidiary in the separate financial statements would have processed in its own accounting records at date of sale of the land would have been as follows. There would be proceeds recognized in the bank account of 110,000 Rand. Land would have been de-recognized as it was sold, and there will be a resultant profit on sale of asset through profit and loss 10,000 Rand. Let's now apply the suggested work method to identify any differences for which we have to write consolidation journal entries. In the separate financial statements of the subsidiary, being my starting point, no value adjustment was made at acquisition date. The land was sold and a profit was recognized of 10,000 Rand. In the group financial statements, there was a value adjustment at acquisition date, and that immediately resulted in a different carrying amount in the group. Therefore, the group should recognize a loss on this transaction of 10,000 Rand. Please note that there cannot be a difference on the proceeds line. That represents actual cash received in the bank account of S. That cannot change. So we've identified differences for the 20,000 Rand at acquisition date, and in the current reporting period, a 20,000 Rand difference on the line profit or loss on sale of asset. Please note, we consolidate at the end of the current reporting period, being 2010. We do this calculation from acquisition date to identify all relevant differences. The consolidation journal entries that will now change my starting point to be what I want it to be in the group statements are as follows. On 31 December 2010, my date that I consolidate, the moment you identified a value adjustment at acquisition date that was not recognized by the subsidiary, the first journal entry that you will always have to write in every single year that you consolidate this group will be that credit revaluation surplus at for the 20,000 Rand. If you do not write this credit revaluation surplus at, you do not have it available to eliminate through your at acquisition consolidation journal entry, and you will end up with incorrect goodwill or gain from bargain purchase at acquisition date. To finalize this journal entry, the question you now have to ask is, what do I debit? And the debit relates to the other item in the subsidiary that's now different from what I wanted to be in the group. When we did example 7.2 initially, the debit was to the land of S that was undervalued. But now the land has been sold. So the debit can no longer be land of S. The land has been sold. So the line item that's different in the starting point being the trial balance of S from what I want it to be in the group is now the profit on sale of land, which we've identified down there. So the profit on sale of S that comes into the group financial statements is a 10,000 Rand profit. To change that 10,000 profit to a 10,000 loss, I need a debit of 20,000 Rand through profit and loss. The first 10,000 will cancel the credit profit on sale, and the next 10,000 would recognize that 10,000 Rand loss. How would my consolidation journal entry change if I move into the future and I have to do the consolidation journal entries in all subsequent years? Again, you always have to create that revaluation surplus at that was not recognized by the subsidiary at acquisition date. If you do not create the surplus, you do not have it available to eliminate. Now's the question, what do I debit? I am now in a subsequent year. The profit made by the subsidiary has moved into the retained earnings of the subsidiary. So the line item in all subsequent years that's different in S from what I want it to be in the group will be the retained earnings opening balance of S, and that will now be adjusted with that 20,000 Rand.